Alright everyone, good morning, good afternoon, good night or good evening, which part of the world you're watching from. Okay, today I'm going to talk about how to draw key level as a pro. How to draw key level as a pro. That's the topic for today. How to draw key level the way institutions do it as a pro. Okay, so most traders fail not because they don't know technical analysis, but because they draw random lines on their chart and call them key level. When you are trading gold, you can't afford to guess. Every dollar moves matters, and institutions know exactly where the price should react. In today's video, I'm going to show you step by step how to draw key level like a pro. By the end of this video, you will know exactly where to mark your chart, so you will stop over trading and start trading with precision. Okay, by the end of this video, you are going to learn how to draw key level like a pro, the levels that the institutions respect. Okay, why do we talk about key level? Think of key level as a roadmap for price. Without them, you are driving blindly. If your chart looks like this with different scattered levels, because I see traders draw different levels and then call it level. If your chart looks like this, suddenly the market will not make sense to you. Key levels tells you where to enter, where to take profit, and where to protect your account. That's the function of key level. It shows you where to take your entry, where to take profit, and where to protect your account. Okay, so in this video I'm going to actually show you how to draw like a pro, especially for gold, especially for traders who want to trade gold. Okay, now what are key level? Key levels are specific price action on the chart that are expected to have a significant amount of buying or selling pressure. Okay, they are levels where you expect markets to go there and to either buy or sell, but with a momentum candle. Once price gets there, it's either it's going to break that level or it's going to reject at that level. Okay, there are just two things key level does. The first one is rejection, and the second one is breakout. These are the only two things that key level does. Okay, they act as a barrier that can either halt or reverse the current price trend or accelerate a move if broken. Just like I said, if a key level is broken, it accelerates the move, or if it is rejected, it acts as a barrier. So those are the functions of key level. Then traders and investors use this key level to make decisions about entering trades, existing positions, taking profits, and managing their risk. They use key level for entry, for exit, and to manage their risk. That is what traders do. Okay, alright, so I am going to show you in this video, before the end of the video, how to mark your key level like a pro, the levels that institutions respect. So by the end of the video, you will know exactly where to mark your chart, so you stop over trading and start trading with precision. Okay, alright, let's dive in. So first of all, like I said, key level has only two functions: rejections or breakout. So I'm going to show you how it works. Let me remove all this at first. Okay, now the first thing is there are different types of key levels. Key key level are actually resistance and support, but there are different types of resistance and support. There are different types. It's not just, oh, price came to support and I'm going to buy, or price went to resistance and I'm going to sell. There are things you look out for once price approaches those levels. But key levels are actually levels where you mark. Once you mark it, you wait for price to approach them, and then you look out for only two things: a rejection or a breakout. Now, there are different types of key level. If you've learned the Malaysian way of doing Malaysian resistance and support, that is the best key levels you ever learn in your life. Okay, so with that, I'm going to explain to you the different types of key levels that exist in the market. Okay, the first one is called the apex or the A level. The first one is called the apex or the A level. Now, how do we mark the A level? Okay, so this is how they look like. I will also show you on the chart. Now, this level is called, this edge is called the A level. You know, it has this A stuff. That is the A level. This edge is also called the A level. So, because it's at the edge, it's called apex. So, this level is called A level. This is also called A level. Now, the second type of level is called the V level. The V level or the apex. Okay, now what's the function of the A level? They act as resistance. That's what they do. So I'll write here their resistance, then I'll write here the function of the V level is the support. Okay, now this is how a V level looks like. Let me delete this and try again. This is V level. So you can see the V here, the apex. It's called apex because it's at the edge. So this is a V level and this is also a V level. So this acts as a support, this also acts as a support for the two types of level that I have mentioned. Now, how do you identify these levels on the charts? How do you identify them on the charts? This is what you do. The first thing you need to do is you go to a line chart. Once you switch your chart to a line chart, you can clearly see the A and the V's, the A and the V's, the A and the V's. Okay, so you mark your A as the apex, you mark your V as the support. Now, these are closing price of the previous days. That's what they are. They are actually the closing price of the previous day. That's what they are on this. The closing price of the previous days are the key level, especially when trading go respects the closing price of the previous days. Okay, so this is the apex, this is an apex, this is an apex. You hear a lot of traders mention the word apex, but you should be able to identify the A level is the resistance while the V level is the support. Okay, so you can identify the A level. This is the A level, This is an A level. This is an A level. Now this is a V level. This is a V level, and this is also a V level. So this is a level. That's it. That is how to identify your level. You change it to line charts and then mark the A's and the V. You can as well change it to line chart with marker, and everything will just pop up for you. The balls that you are seeing here are the levels. All the balls you are seeing here are the levels, but I'll get to this towards the end of the video. So you need to stick around so that you understand how to use line chart with marker. Okay, so now let's go back to our candlestick. So you can see how price, reacted on these levels. You can see how price reacted on these levels. Price came here to the level and rejected. The first time rejected, second time it rejected. Price came here and rejected. The third time you can see price came here and rejected, meaning that this support is holding. A rejection is a wick. Some people will call it liquidity sweep, but what it is a wick. Once price gets to a level and wick out and then come back and close above that level, that is a rejection. So that's what makes that a key level. That's what makes that place a key level. Okay, so I will go to the past and also see the reactions on this key level. First, like I said, change to line chart and then mark the level so that you see how price reacted on these levels. On this apex level, the V and the A levels, you see how price reacted on these levels. Now let me change back to candlestick. You can see how price reacted on them. Can you see how price got to this level here, for instance, got to this level here, rejected. See the rejection on this candle. Got to this level, reject on this and close below it. Once you see this, it means this level is strong. Price is likely going to hold it, reverse once you see that rejection. And what happened the next time when price got back to that level? It broke it. See, it broke it. So there are two things key levels do, they either reject or they break out. It broke it, as you can see, and then form another bullish candle. This was a breakout. It came back to that same place, broke it down, rejected it, and then came down. Okay, now see here, this formed a level. See what price did when it came back. It respected it. When price came back to this place, it respected that level. This was what formed before. When price came back to that level, it respected it. Okay, I don't want to mark so many. There are so many levels in between here as well, so many. I can mark it for you to see. There are so many levels, and price is either breaking out of them or respecting all of them. See, these are levels. See the way price came here, rejected, closed above it, and went back up. See the way this one came back, hit that level and moved up. The same thing here, moved up. See, when it got to this level, it broke it. This is how to draw your key levels like a pro. Okay, so that's the first type. Those are the first two types of key level. Now the third type of key level, I'll call it the resistance break support, or support break resistance. It's written like this: resistance break support, or support breaks resistance. This is the third type of level. so I will name it as a level. It's actually a level. This is the third type of level, and this is how it looks, something like this. Okay, so now this was an apex that was formed. What happened when price came here? It broke it, and so when it broke it, this place became a resistance or a resistance break support level. Price came back and retested it, and then boom. Okay, so this now acts as a support. It was once a resistance, now it acts as a support, so it's now a support. So you mark these places as key levels. So now it acts as a support. You mark these places as key level. I'm going to show you that on the chart as well. So this is how you know breakout. This is how you can clearly see breakout, and then wait for price to come back to that level and retest it, and you wait for either a rejection or a breakout. Like I said, there are two things key level do: they either reject or they break out. So once you see the breakout, once you mark your level, it was once an apex, then when price came, it broke out, and when it came back to retest, once it breaks out, that level becomes a support. It's no longer a resistance. Okay, so it's called resistance break support level. Okay, now if you have something like this, okay, so this is not, this was a support, got broken. This was another support, got broken, which is the V level. So now this place that was once a V level is now a resistance break support level, because all you need to do is wait for price to come back and retest it. All you are looking out for is a rejection or a breakout. So once you see a rejection here, you know that price is going to come lower. Okay, so this level, this is now acting like a resistance. To now act like a resistance, and this also acts like a resistance. This also acts as a resistance. These are the levels that the institutions use, and price always do two things: they respect or they break out. Those are the only two things that price will do once it gets to those levels. But so once you know how to mark them, all you are looking out for is just that breakout or a rejection. That's all you are looking out for. All right, so let's get to the charts so I can show you this on the charts as well. Okay, so how do we identify resistance break support levels? You also go back to your line chart. When you go back to your line chart, okay, this was once a resistance. So if I mark this place as a resistance, I'm waiting for price to come back. You can see that this was a resistance. Price broke through it. So what do I want? I need price to come back and retest this level. So if this level holds, it means that was the resistance break support. So I'll change it back to chart, candlestick chart. So you see a, okay, you can see this, you can see it very clean, very clean. See the way price came and rejected there. See how beautiful it happened. So once you know how to draw these levels, you will understand where price is likely going to come to. Either it rejects or it breaks it. Either it rejects or it breaks it. Okay, so for now I'm just showing you the levels first, how to draw those levels, how to identify those levels. Okay, let me look for another example. the first thing is to take it to line chart. Then the next thing is you identify, you draw a breakout. You always see a breakout. These are breakout. A lot of people don't know breakouts. A lot of people are confused when they hear, oh, there was a breakout, but I'm making it clearer now for you. The easiest way to identify a breakout is using the line chart. It's what some people will call breaker block, or yes, that's what they call breaker block. Well, it's just a breakout, nothing more. It's just a breakout. But once you use the line chart, you can see it clearly. Okay, this was another breakout because it broke through it. Okay, this was another breakout. Price broke through it. This was a breakout here because price broke through it. So after you've done this, the next thing you need to do, go back to candlestick chart and then watch how price reacts. Like here has not been mitigated. This is a level, but it has not been mitigated yet. See what happened here. Price broke through. See what happened. Came back very clean, came back and touched it, rejected it and continued. See what happened here as well. It broke through this place, came back, retested it and moved. And even when it came back the second time, it still rejected it, printed an engulfing candle and boom. So it shows you that those levels are strong. It doesn't mean that price must reject on top of the level. No, we'll just come and touch it and go. No, what it means is that price should wick below it. If that level is going to hold, price should the first thing it should do is it should wick below it, and after it has wicked below it, it should close above that level. That's what we call a rejection. Some people will call it liquidity sweep, but I don't look at it as liquidity sweep. If I'm trading levels, I call it a rejection, because for levels, it's either there are only two things. Like I said, it's either there is a rejection or there is a breakout. See what happened here? There was a breakout. There are two things that happened. Then price did what? Came closer to that level, even though it didn't touch it. So this makes this place still fresh. This place is still very fresh. Price will still one day come back to test it, because it hasn't tested. Even though it came close to it, hasn't tested it. Okay, but you can see how accurate it is. You can see how accurate it is. Okay, so for instance here, there was a breakout here. Price range, and then these were all A levels. A level. Price, each time price comes here, it rejects. Each time it comes here, it rejects. Each time it comes to that level, it rejects. Each time it comes here, it rejects. What happened later? It broke out, and since then price has not come back here. So anticipate that one day price is going to come back here. It's going to come back here. So that is what makes this a strong level. All you just need to do is put it back on candlestick and then mark it and keep. One day price, you will come back here. This is how to identify breakouts and retest. A lot of people don't know it. The easiest way is to use your line chart. That is the secret. The easiest way is to use your line chart. That's the secret. Okay, so that's the third type of key level. Now the fourth type of key level is called the right shoulder. The fourth type of key level is called the right shoulder. It's called the right shoulder level. Okay, how does it look like? Okay, so let's see. You have something like this, came back down, broke through it, came back below this other one, then it went back up, and then boom, down. Okay, so in this pattern, with this pattern that you've seen me draw, there was a lower high, or higher low, I mean a higher high, a higher low, a higher high, and then price broke this place. price broke this place. Price broke this place, and then form a new low lower than this place. And then when price pushed back up, it didn't get back to this high anymore. It stopped here. Now we call this place right shoulder, because this is the left shoulder, this is the head, this is the right shoulder. So once you see this pattern printed, this place is the right shoulder level. So you mark this place. Once you see just only this breakdown, some people will call it change of character, some people will call it break of structure, depending on whatever you see. What matters is once you see that the previous low of the swing was broken, and then there was a left shoulder, okay, you mark that level. This level now acts as a resistance, so we call it is a resistance level. So what you're anticipating is that price should come back to this level. It's called a right shoulder level. It's actually a key level. You're anticipating that price should come back to this level and do two things, and either it breaks out or it rejects. It's just those two things you are waiting for. So all you do is you just mark the level and wait. That's all. You just mark the level and wait. So now let's say you wanted to buy and you have something like this. I hope I'm drawing it well. Okay, have something like this, then price comes back here and do something like this. Okay, so here there was a low, there was a high, there was a lower low, there was a higher high, and then when price came back to this level, it's still called the right shoulder. So you mark here. Once you see this pattern, you mark here. You are now anticipating that price should come back to that right shoulder and then move up. That's your anticipation. So this level is a key level. These are levels that market makers respect. These are levels that institutions respect. All right, let's dive into the chart and check out examples as well. Okay, how do you also draw that? You may not really need line chart for this, but you can still use line chart. Okay, but let me try to identify anyone that looks like that. Let me use line chart first. Now see, let me zoom out here. Let me use line chart here. Now this was a level. Okay, this was a level. This was another level up here. Okay, price came and broke here, this low. This was a low, price came and broke it. Okay, so what happened here was this was the left shoulder, this was a low, this was a high. Okay, this was a high, this was a low, this was a higher high, and this was a lower low. Okay, and now when this lower low was formed, what happened was price came back. You mark this place as your level, because this now becomes a resistance. This place now becomes a resistance. This place is now a level, but it now becomes a resistance. So what do? You mark it. There are two of them here and this upper one. Okay, so this is your right shoulder. So you're anticipating that once price comes to this place, is either it should reject or break out. So let's see what happens using candlestick. Okay, you can see that once price came to this first one, it rejected. Okay, It rejected. So that's what makes this a level. That's how you can see that, okay, price once it comes here is going to reject. So once you know how to draw these levels, you are good to go, because you are anticipating that once price comes here, there is going to be a reaction. So what are you doing? You wait for that reaction, and there are only two things that can either happen: a rejection or a breakout. Just two things that can happen there: a rejection or a breakout. So if you know how to draw your key levels very, very well, just like I'm teaching you, by the end of this video, you will be able to identify where you can see a clean breakout. And a breakout candle must break with a full candle. That's a breakout. A rejection is a weak, it can break through it, but once it comes back and close below it is a rejection. Do you understand? It can break through it, but once it comes back and close below it is a rejection. Below or above it, depending on where you are drawing it, is a rejection. Okay, so now what happens here? It created here a lower low. Okay, but then price came back, because this was a level. Price came back and respected it. So once you know how to draw all these key levels, you are expecting price to come back to those levels, either do one or two things: reject or break. So you're not going to just use the level for entry. No, you are going to wait and watch out for a reaction. You're not going to predict the market, you are only going to react. So you wait and wait for just two things: is it going to break? Is it going to reject? If it rejects, then price is going to go in the direction of the rejection. If it breaks down, then price is going to go in the direction of the breakdown. It's as simple as that. It's as simple as that. Once you know how to draw these key levels, it's as simple as that. Okay, now I've shown you example of both the resistance. This was the resistance when price came here. You can see it reacted here and came down. So this place was a support. When price came here, it reacted and then came back here and broke through it, and off it went. Okay, so that is that the third one or the fourth one? Can't really remember how many numbers I've counted. Anyway, that should be the fourth one, I think. Yeah, that's the fourth one. Okay, now the fifth one and the last one. The fifth level and the last level is called the gaps level. It's called the gaps level, or you will hear people say something like open and close level. You hear people say things like open and close level. Okay, you're going to hear people say things like open and close level. Now, what are gaps level or open and close level? Now, once you see a momentum candle like this, and then price comes back and does not close, if it does not come down and close at least below or in between it and create these gaps, this is a level. So you can mark here as your level. This is a level. So this level, this gap between the opening price and the closing price, there is a gap between the opening and the closing price of these two candles. This makes this a key level, so it's called gap level. This is another one here. So if you see two green candles, that place acts as a resistance. Sorry, if you see two green candles, that those places act as a support. If you see two red candles, that place acts as a resistance. Okay, so what are you waiting for? Once you mark those levels, what are you waiting for? A breakthrough or a rejection. That's all you are waiting for: a breakthrough or a rejection. This is another example of gaps. So that place is, you can see how market came, rejected. And like I said, a rejection is a week out. A rejection is a week out. A rejection is a week out. So what did you see here? Price came and wicked out, came back and closed on top of the level. did the same thing again, close above the level. Once you see that, market is going to go up, because this is now acting as a support. This is acting as a support. This level is acting as a support, so market is going to go up. Okay, I can show you several types of, once it breaks through it, is no longer a resistance. Like here, this was a resistance, but what happened? Price came and broke through it, came back and retested it. Okay, and then broke down again, came back again, broke through it, came back, rejected. So those are the things you are looking out for: a rejection and price closing above it, you know, and all that. Those are the things you are looking out for. You're waiting for price to react at this level. You are just waiting for price to react. It's not a level for you to take your entry. All you just looking out for are just two things: a rejection or a breakout. Once you see those two things, you will know the next step. Definitely you will know the next step, so you need to wait. Okay, you will know the next step. So you can see how price reacted at this level. Can see how price reacted at this level. That's how to draw your key level. Two red candles act as resistance, but once it breaks through it, is no longer a resistance. That place now acts as a support. Here, this place has not been tested. Price will surely come back to retest this place. So you will say, oh, it's not mitigated, it has not been, it's still fresh. Some levels are still fresh. Price will surely come back one day to test it. This place too has not been tested. Price will surely come back one day and test it. Okay, there are a lot of levels that have not been tested. Price will surely come back and test them. Okay, so we have 5 types of levels, and I've shown you all of them on the charts. The first one is the A level. The second one is the V level, which is support. The third one is the resistance breaks support level. The fourth one is the right shoulder level, or QM. I even forgot the name. Right shoulder level, or you call it QM level or QM level. And then the fifth one is the gaps or open and close level. See, you will see people write things like this: open and close levels. Okay, so once you have a good understanding on how to mark these levels, all you just need to do is wait for two things: a rejection or a breakout. Your own is to mark it and keep. All right, so which time frame is the best time frame to mark key level? As a day trader, the best time frame to mark key level, especially if you are trading gold, is the daily time frame. It is actually the daily time frame. Now, what will I do? The first thing is I change it to line charts. But instead of using line chart, instead of trying to identify all this level by yourself, or saying, okay, this is key level, this key level, that, blah 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 blah, all you just need to do is put it on line chart with marker. This line chart with marker will identify all these levels, all these 5 levels for you. All these balls are the key levels. They are the closing price of the previous day. All these levels are the closing price of the previous day. That's what they are. So I will show you now all of them on this line chart with marker. Okay, I've marked that place. I don't want it to look to cluster, because the most important area you need to mark are the ones that price has not retested. Those are the most important place. Okay, I don't want it to cluster, but I'm going to mark as much as I can so that you will see the level, the different types of level in between them. You don't have to start learning A level, V level, blah blah. No. Just put it on line charts with marker and then mark the balls. Those are your level. Those are your daily level for the. Those are your daily level. And what does gold do? Gold every day moves in between those daily levels. So I will mark all this as well. So I'll show you how everything reacted, though I can't mark everything. You can see the cluster, but I would say use the current trend, this current trend, because this is the current trend. So just mark the circles on the current trend. Mark the circles on the current trend. Let me go back to the previous one. It was a level. I'm just going to show you all the 5 levels inside this circle. Inside this circle. Yes, it might look clustering, but what you should mark is, when you are marking, is the current trend, and then the high and the low of the swing. Okay, it's the current trend. That's what you should be marking. So these are the levels. Now I'll change it back to candlestick pattern. Okay, so you can see this was my gaps, this was resistance break, support. If I put it back, you'll see this was resistance breaks, price came back, retested, and boom. That's how simple it is to identify breakout. That is how simple it is to identify breakout. This was gap level, this was another gap level, this was another gap level. Okay, this level was resistance break, support. It broke out, price came back, rejected, tested, rejected, and boom. That's it. That's how beautiful. This was a level. What happened here? Price rejected the first time and then came back later and broke out. This was the candle that broke that level. What happened after? Price came back and retested it, and boom. That's what you are waiting for. All you just need is price coming back to this level, and you are just waiting. What will happen after? Is it going to break? Is it going to reject? If it breaks, you know that price is going to go in that direction of that breakout. That's how simple it is to trade gold. There is no long thing. There is no long thing. Go respect all these levels. Go respect all these levels. The one that he hasn't tested yet is going to come back for it. Is going to come back for it. You can see this was a breakout. Price came back and retested it. Okay, these were apex, these were V level, these are V levels, these are, all of them are already inside those circles. They're already inside there. But looking at my lines, you would think, okay, the lines are too clustering and all that. No, if you are trading for the day, all you just need to do is, let me start again, so you don't have cluster lines. Let me remove all the drawings first. In order for you not to have cluster line, look at the current swing. This is the current swing. This is the current swing on gold. Okay, so you are just going to mark the levels on this swing. The ones that has been tested already, you may not need to consider it. Okay, so the first thing is just switch to line chart with marker. Zoom out. You see the circles. You see the circles. So you mark. This is the V levels. This was an A level that was broken out. You see that price has retested it. This was an A level that has been broken out. You will see that price has retested it. This was here. This was also here. Okay, you just need to mark only the current one, the swing one. You don't need to mark all of them. Just mark and reach at a certain line. You know, you just mark and reach. Once price break, you look for the next available one. Once it breaks that one, you look for the next one. You just mark them, so you don't cluster your chart. This is your key level for the day. You take it back to line chart. All you are waiting for is price to come back to this level. And what are you waiting for? Either a rejection or this was a level that has not been tested, so you must know all of them. This is a level it has not been tested. So what you're waiting for is for price to come back and reject. As you can see here, gold has rejected that upper resistance. Like I said, rejection is weak. Once it weaks down, price came back to this level and has rejected it. It has rejected it. This candle has rejected it. That's it. Until it breaks out of this place, it will continue going up. But until then, there's a high probability gold is going to sell to this next level. Once it breaks this level, there is still a level here, but it has been tested. This level has been tested. There is a level here. It has been tested. This was tested, so it's no longer fresh. So there is a high probability that once price comes, it's going to do something like this and break and come down and test here. So once you see it here, what are you waiting for? You don't just jump in and buy. This is now a buy. This is now a support. You don't just jump in and buy. You wait for what? A rejection. You must wait for that rejection or a breakdown. Okay, that is how institutions trade. These are levels that institutions respect. These are the levels that institutions respect. So once you know how to draw key levels are lines. They are not zones. They are just single lines, single resistance and support line. But you must know the right places to draw, where price is likely going to do two things: either break or reject. Okay, either break or reject. Okay, so that's that for the key level. Okay, so now you know how to draw key levels like a pro. Remember, fewer and cleaner levels will always beat a messy chart. If you found this video helpful, hit the like button, subscribe and drop a comment. If you want me to make a follow-up video showing my exact gold trading strategy using this level, okay, then I would like you to comment. Then I'll do another video and I'll show you how I take trades from the levels. I will do another video on how to take trades on from the level. So comment, like and share if you have learned something profitable or you've learned something that you never knew before in your life. Okay, all right, so thank you for watching. Have a good day.